Welcome back. Joining me now is Beverly Wagner, owner of H&R Block of Angola.
Thanks for having me, Jennifer.
Oh, I'm so glad you're here. What we want to talk about, Bev, are the things that we need to do to prepare with our bookkeeper and to get us ready for tax time.
I guess the biggest thing is organization.
Absolutely.
Absolutely. Getting ready for tax season basically begins January 1st, not the end of the year. Your bookkeeper or your wife or spouse or whoever's handling those books will do best if you start then and not wait 6 months or so until you finally hand them a pile of papers. Each tax return, whether it's a personal or a business return, has certain categories. So it's wise to start by finding out the categories, putting them on a spreadsheet, using a software program, and from there you'll be able to drop in the amounts, and at the end of the year, when it comes time to go to do the taxes, you've got totals instead of a pile of papers to take to your preparer. Will generally work best.
Let's talk about residential. What do homeowners need at their home office? What do they need to be keeping track of? What do they need to keep on hand?
Generally, a small business owner who works out of a home office, a lot of deductions there when they don't have an office elsewhere because they have the business use of home. So it ties into your personal return as well as your business. One of the things you'll want to track is actually all your utilities, because if your office is 5% of the square foot of your home, then all 5% of your utilities, your house insurance, and all that's going to become a deduction on the tax return for the business. Their advertising expenses, mileage is a great deduction for the small business owner. It's a hassle to track, but when you see the final number, last year, first half of the year, they were only paying 50.5 cents. After July 1st, it went up to 58.5 cents. Makes a big difference on that tax return, trust me. Depreciation, if you're one that has a lot of equipment, computers or whatever, you need to bring the receipts so your preparer can have the date of purchase, what you purchased, the type of equipment, because larger items like that you generally will depreciate, which is spread out over a period of years, because you may not need that $1,000 now, but come 5 years you're going to appreciate having part of that deduction at that time.
So each and every item that you're using for your business, your equipment, your office chairs, your pens, pencils, overhead projector, your paintbrushes, anything that you're using for that home office.
Save the receipt.
Okay.
You want to save the receipts, yes. Your office itself, though, at your house, anything in there, the desk, the carpet that you just put down, that's 100% deductible. So there you're doing setup for a new office or that. Great deduction. Again, even that could be put together as remodeling and also be depreciated out over a period of time.
What about the basic homeowner? What type of things do they need to keep?
The basic homeowner, whether it be you own the home or even rent, you too probably have deductions that you'll want to track as well. The one that owns their home, the standard deduction, whether it's single, head of household, married filing joint, everyone gets. So the ideal is we want to get higher than that. Itemizing will get a homeowner or someone with a lot of unreimbursed job expenses, such as a truck or in that, a higher deduction than the standard deduction. A homeowner has their mortgage interest, has property taxes, charitable deductions are great, 100% deductible. State and local taxes you really don't need to track, as far as most of that is on the W-2, except if you paid last year or you made estimates throughout the year. The unreimbursed job expenses, not a lot of people have them, but someone in the field where they travel a lot will definitely have meals, maybe lodging, and can also be put on there if they don't have really a small business, they're just not getting reimbursed by their employer. The new thing this year, which will benefit almost everybody that owns a home, is a lot of homeowners can't itemize. The mortgage interest has fallen down, and so they've fallen under the standard deduction. This year, they're allowing all homeowners that have paid property taxes to take the standard deduction and put the property taxes right on top of that, and that way you pay a little less tax to the IRS.
Good to know. Okay. What additional credits or deductions could you recommend?
This year, one of the larger ones that they're giving out is an energy efficient credit. A lot of the appliances and that we were able to take prior years, they haven't been as generous with this year. But if you happen to be putting in a geothermal furnace, fuel cell, or solar panels, there's some up to $2,000 on some of those. You can get a credit on your return. Insulation, Indiana's got a great deduction they've had for years, and it's up to $1,000 a year for upgrading, such as a single pane to a double pane window, adding insulation, extra caulk, anything along those lines where you're increasing the energy efficiency of the home through some type of insulating product.
Excellent. Tell us about businesses then.
Well, we've got the small businesses out of their homes. Corporations, limited liability, some of these have deadlines coming up soon. They have to have their taxes prepared before March 14th so they can flow over to the individual with their K-1 so they can complete their taxes by the April 15th deadline. They're all businesses. Some have different deductions they can take, especially with insurance and that. So you really need to go talk to someone if you're trying to do it on your own and make sure you're getting all your deductions because who wants to leave money with the government that we don't need to? So there's a lot of legal deductions out there. Talk to a professional. They'll be able to get you set up. One, a bookkeeping through the year is so key to getting your taxes done right. And the other part is recording that mileage, because that is going to be one of your bigger deductions, especially if you're one that's on the road a lot.